Today I want to talk about Tesla. The stock received a downgrade from Wells Fargo that sent the stock tumbling over 4%. So I want to give my opinion on this downgrade, but also dig into some of Tesla's numbers and discuss what they could mean over the course of the next 1 to 2 years. So if you enjoy the video, drop a like down below, and if you want to see more videos like this one, make sure to subscribe. As I mentioned in the intro, Tesla stock is down over 4.5% on the news of this downgrade, and it gets worse when we zoom out a little bit further. Over the last month, the stock is down over 10%, and in the last 6 months, Tesla has dropped almost 40%. However, if we look at the course of the last year, we can see that the stock is still up slightly from its 52-week low that it achieved back in April of 2023 of around $154. And this large drop in Tesla comes from a number of factors, but the biggest concern to investors has to do with the price cuts that Tesla is implementing across a lot of their vehicles. And this has had a direct effect on their earnings. We can see that bottom line numbers over the last 2 quarters have missed by 4% and almost 10%. And top line numbers missed by about 2% and 3% in the 2 most recent quarters. And when you start underperforming expectations, analysts will come out and start dropping their price targets and downgrading the stock. And that's exactly what we are seeing here with Wells Fargo. Wells Fargo analyst Colin Langan downgraded the stock from equal weight to underweight, as well as slashed his price target from $200 all the way down to $125 per share. The biggest concerns for this analyst were around Tesla's recent price cuts, like we mentioned earlier, as well as a potential slowdown of EV deliveries. Personally, I am not a Tesla shareholder, but I don't think either of these are a large concern. I think that deliveries over the next 2 to 3 years could actually pick up, and a big catalyst for that could be the lowering of interest rates. If we see interest rates drop lower, this will encourage more people to go out and potentially take out auto loans to buy a car. And this could be a big catalyst for Tesla, as they are the #1 player. And right now, people who are upgrading their cars, they have to be looking at EVs. There are a lot more EVs on the market, and there are a lot more options to consider. And I think Tesla is an easy go-to for new car buyers if they want to look at an EV. They're going to still look at combustion engines as well. There's no denying that. But I do think that EVs have piqued a lot of interest over the last few years and gotten people interested to at least consider them as an option. However, I do still have concerns about the price cuts. I think that these should be concerns for investors, because one of the biggest things that has really allowed Tesla to grow in a significant manner has been the fact that they have had a very strong margin on their vehicles. This has allowed them to be very profitable and really differentiate themselves from a lot of other vehicle manufacturers. So the fact that they're having to reduce their prices, I do think is a concern. However, I think again, over the course of the next year, if we see interest rates come down, this could re-spike interest, and they may actually be able to increase their prices slightly and help improve their margins. One thing that has had a negative effect on Tesla's earnings as well as their margins this year has been the shutting down of their Berlin Gigafactory. This was due to conflict in the Middle East that was restricting some of their supply chain, and they had to shut down for a couple of weeks. And there's no doubt that reducing their overall production throughout the world is going to hurt their top and bottom line numbers, as well as potentially have an impact on their margin, as they would have to source parts from different areas of the world. As we hopefully start getting some of these concerns behind us, as well as Tesla working through other options on how to source parts, as well as negotiating better prices, this could help improve the company's overall performance, their EPS, and their top line numbers. And right now, analysts are projecting that 2024 will continue to be a slow year for Tesla. They have an average EPS estimate of $3.03, which is actually down from a year ago of $3.12. However, in 2025, they are expecting this number to pick up in a major way, about 35% growth year over year to $4.15. And personally, I think this 2025 number of $4.15 could be beat. I could see them putting up somewhere closer to $5 of EPS, but I think it's dependent on interest rates. That is a huge factor for auto manufacturers, because when interest rates are lower and it's easier to get a car loan, a lot of people will go out there and buy. Otherwise, they'll hold off and they'll just make repairs to their vehicles. Buying a new car is generally something that is a little bit more of a like to have than a must have. You can oftentimes repair your vehicle for less than it would take to buy a new vehicle, and that is just common sense. So when you think about it, if interest rates are high, it doesn't make sense for a lot of people to go out there and buy new vehicles. However, if we do see interest rates drop on the back half of this year and running into 2025, that could set up for a very solid year for Tesla. And the top line numbers reflect a very similar story. We can see that for 2024, analysts are projecting around 12.7% growth year over year, and for 2025, they're expecting growth to accelerate slightly to 20.6% growth year over year. Right now, we are seeing a lot of pessimism around Tesla, and frankly, it is kind of warranted because they have missed numbers in the last 2 quarters on not only their top line, but also their bottom line. And analysts are seeing this and actually dropping their EPS estimates. 60 days ago, they had an EPS estimate for 2024 of $3.78. Since then, it has dropped to $3.03. And this trend is similar for 2025. We can see that 60 days ago, analysts were projecting $4.96 of EPS, and that has dropped all the way down to $4.15. And when EPS estimates start to drop, analysts will also look at their price targets and begin to lower them. And currently, Tesla is sitting at an average price target of $205.22 with a high of $320 and a low of $23.53. So in my opinion, this low price target of $23.53 is very unreasonable. I do not think the stock is going that low. And oftentimes when you see this much of a difference between the average and the low price target, it is because there's an analyst out there that has something against either the CEO or the business model. They do not see the business working over time, or they see the CEO as being some sort of problem to the overall company, or potentially they have something against the CEO because of what they said or what they have done. So I think that is likely the case here with Tesla. I don't think that is reasonable. It's probably more of an emotional price target from an analyst. And right now, Tesla is trading at a relatively fair valuation. Yahoo Finance has their forward P ratio sitting at a 56.82. When I run the numbers for 2024 earnings of $3.03, I get a PE ratio of 55.54. And for 2025 at $4.15, I have a forward P ratio of 40.55. However, like I mentioned before, I think that Tesla could potentially put up $5 of EPS in 2025, and that would mean that they are currently sitting at a PE ratio of 33.66. Personally, I would like to pick up shares of Tesla at a PE ratio of 25. For me, that means that the stock would need to drop to a price of around $125 based off of projected earnings in 2025 of $5 of EPS. This means that Tesla's stock price would have to fall to levels that we saw in January of 2023. I don't know if this is going to be possible. I think if we see a couple more quarters with very poor results in terms of EPS and revenue, I think we could start seeing the stock fall down to those levels. However, if we also see the Fed start mentioning when they are thinking about lowering rates, that could have a big impact on Tesla preemptively and start bringing up their stock price. So there are a couple of things that really would need to happen here for me to get into the stock. We'd have to see the Fed holding off on lowering interest rates, as well as Tesla put up a few more bad numbers, and that could potentially get us down into that range. But we'll have to see what happens over the course of the next few months. But keep in mind, do not buy a company just because some random guy on YouTube talked about it. Make sure you are doing your own research and looking into companies that meet your risk tolerance as well as your time horizon. So with all that said, I hope you enjoyed the video. If you did, drop a like down below. And if you want to see more videos like this one, make sure to subscribe. And as always, guys, have a wonderful rest of your day.